Everyone, and welcome to another episode of Around the Block Talk. Today we have with us Mr. Siddhanjay Godre. He's the principal blockchain engineer at Bybit, which is a crypto exchange based in Singapore. And he is quite passionate about the space, having spent a few years in this particular crypto and blockchain space. So, very happy to have you with us today and looking forward to what you have for us. So, over to you, Siddhanjay.
Thanks for inviting me. It's lovely to be here and able to share my learnings with all of you guys. So just to introduce myself, I'm Siddhanjay, and I work as a principal blockchain engineer at Bybit Exchange, where I work at. So Bybit is actually among the top 3 derivatives exchanges in the world, and like we do about more than $10 billion of trading volume every single day. And we offer the main product offering is derivatives and futures contract, but we also have spot exchange as well as upcoming options product. And we also offer various different kinds of investments like some staking products and P2P trading as well. So we are live currently in many countries across the world. With a few exceptions like Singapore and US, where we are not licensed yet. But like for the viewers viewing from India, you would be able to like trade on Bybit, and it's quite a reliable platform and quite a big one. And we also offer some joining bonuses for people just starting out in crypto, so you can earn a referral fee when you start out. So you are incentivized to use our platform. Yeah. So about me, so I'm a principal blockchain engineer. I mainly work on the smart contracts and solidity side of things. So I've been interested in the space since about early 2017, and like got started with some crypto investments, and I later got interested much more on the tech side of things. I explored around Ethereum and smart contracts, and mostly started out with participating in several hackathons, building out some prototype projects and winning many of them as well. So after starting out some side projects, I decided that maybe it's a good opportunity and good chance to move into crypto full time, as the space was booming quite a lot. So, and it has been quite an eventful journey so far. So to get started with my talk today, I'll be sharing about how to get started in crypto in 2022. So let me just share my screen for that. Yeah, so great. Yeah, so today I'll be sharing how to get started in crypto in 2022. So I want this to be quite a basic talk for anyone who just wants to, who is a beginner and just wants to start out in crypto. So we'll mainly be seeing what are the types of, we'll try to understand the risks within crypto, how you can onboard to some of the platforms, what are the different things you can do within DeFi and many of the on-chain stuff, and where exactly you can start. So just trying to filter out the noise over here. So you might have seen various crypto advices or investment advices on YouTube or some TikTok investors, and basically every other platform is filled with such noise. So I'm trying to filter out this and trying to give you the fundamentals from which you can be a judge of your own and guide yourself from the way through. So the first and the biggest part I want to start with is understanding the risks. I know that a lot of people like might have gotten into crypto without really understanding the risk, and they lack at risk management, and they just see some of the people shilling some tokens and they just buy into that. So risk management is probably one of the biggest things you would need to understand. So talking about the risks, let's break it down into 5 fundamental things. So the first is the volatility. So this is also a risk as well as an upside. So for volatility, for traders, volatility is the thing which makes you money. You see the prices going up and down a lot, and this kind of fluctuation in prices where people or traders can actually make money. But also for long-term holders or people who don't understand how the volatility works, it may be some downside for you, as you may like FOMO into buying stuff, and if it dips a lot, you may be forced to sell your assets. So just be aware that the crypto prices can fluctuate a lot in market value. And another thing to understand is the reflexivity. What I mean by this is that there are feedback loops between the expectations of a token price and the economic fundamentals. And this can over time substantially deviate from the equilibrium price. What I mean here is the best example would be Dogecoin, where if you look at the fundamentals of the token, the economic fundamentals are close to nil, but and it's supposed to trade close to zero. But what we actually saw in the market was people had different expectations, and the price of the token deviated a lot from where it was expected to be traded, and it was mostly powered by like memes and just hype around it. So and there's other the inverse of it as well. Like you would have noticed many very strong projects with very good fundamentals, like maybe Yearn Finance, whose tokens people would have expected by fundamentals would trade at a high price, but keep dipping all the way through the market. So it's like people need to know that while trading tokens, the fundamentals and the price of the token can heavily deviate. And also understanding asymmetric gains, and the counter side of this is also the asymmetric losses. So what we mean by this is if you invest maybe $100, you could expect to have like 10x your investment on some low market cap coins and get like maybe a 10x return. But the counter trade for this is also expect similar asymmetric losses as well. So just recently, how we saw with Luna and UST, even though they were very strong assets with a very high market cap, they lost close to 100% of their value. So these asymmetric gains and losses are to be expected within crypto. And and also understand that none of the crypto assets are FDIC insured. So if you do some mismanagement on your crypto transactions, like there is no hotline to call where you can ask the customer support to revert your transaction. It may be possible on exchanges, but while doing on-chain stuff, there's no one to help you out. So you have the custody of your assets, so you are responsible for what you do. And in many of the countries, crypto transactions are taxable. So many of the people don't know about this when they are starting out, and later on when they are liable to pay taxes, only they may find out at that time about the taxes. And it's actually quite complex to assess what types of taxes would you need to pay on your crypto gains. And there's a lot of information asymmetry out there in the market. So like I would expect for anyone just starting out, there are many topics which would be very hard to understand, but also know that understanding the fundamentals of these things is could be your power or your leverage to gain a better understanding of the market overall. And also be very aware of the economy of false experts. So it's the space is ripe with a lot of scammers and people pretending to be experts on things, but all they are just trying is to shill you their bags and might just dump the token later on. So be aware of such crypto influencers and like filter out the people who you follow. Just try to see if they have any potential incentive to share the knowledge that they are sharing, or is it just to like dump on the public later on. And the biggest risk, I would say, is the fifth one is you. So like the human element of all of it. So like people like get greedy. They might see that their token has shot up maybe 2 times, but they still wouldn't be willing to sell. You might act out in haste, just seeing that something is going up or down in value, and try to buy or sell something without actually doing any research, just FOMOing into things. And also taking care of the security. So a poor OPSEC is also responsible for like clearing out your entire portfolio. Maybe you don't store your MetaMask keys in a safe place, or just give out your key to some scammer. That would erase kind of your entire portfolio. So these are some of the risks. And so let's see how we can learn from this risk, what we can learn to mitigate this risk, red pilling the risk. So basically the first step towards understanding this. So for the first thing, for the volatility, I would say learn to understand stable coins. So not everything is volatile. There are stable coins which are supposed to have a peg of 1 to 1, and there are lots of different types of stable coins as well, like USDC and USDT, which are backed 1 to 1 by an equivalent asset on a centralized counterparty. And there are algorithmic stable coins like UST, which we recently saw failed immensely. So like people who had actually gone and read out how UST works, and they had an understanding of the fundamentals, how it's not actually pegged to anything, but it depends on the price of the Luna token. They would have understood the risks and might not have traded on these tokens. So understanding the fundamentals around what you are investing is probably the most important thing. And not being tokens not being FDIC insured. So how you can mitigate this risk is diversifying across different tokens or asset classes. So instead of just buying into one of your favorite token, you could spread out your investments across different categories of such tokens. And apart from that, also ensuring that you are guarding your private keys correctly. So I would recommend like using a hardware wallet like a Ledger, where you which is basically unhackable in terms of your private key. So instead of just having a hot wallet like MetaMask and using it for your day-to-day operations, if you can spend like $100 for buying a Ledger and using that with your MetaMask, or just using that as a cold wallet, that's highly recommended. And for the taxable events, I feel that CoinTracker, the website called CoinTracker, can be used to like understand how the taxation system would work on your crypto. Although it's not 100% accurate, but you can get a head start on understanding things. And for the information asymmetry, I would say just don't believe everything people say out there. Do also verify the stuff. So how do you verify many of the things? Probably the best place is going to CoinGecko. So on CoinGecko, you can not only just see the prices, but you can also verify many of the other things, like how is the token supply changing, what markets is the token tradable on, and understanding how the token allocation works between teams, and like how much percent of it is in treasury. So you can just go to CoinGecko to understand more and verify stuff. And DeFi Llama is also one of the very good platforms out there, where you can see the general trends of the entire crypto ecosystem, and mostly on the DeFi side of things. And apart from that, there are a bunch of other trustworthy newsletters and podcasts and information sources out there, like Bankless, Defiant, Real Vision, Delphi. So these are some of the things which you can follow and gain an edge on your information, and not be left out from the information asymmetry. And so for the risk of you being careless, so you might need to have some self-discipline, and also understand to learn to walk away from your investments. Many of the time people, there's a phrase in crypto called marrying your bags. So if you see that the fundamentals of some investments have changed a lot, but you were uh, like maybe you just follow religiously some token, and you might not realize that the fundamentals have changed, and you might not be willing to walk away from that investment. So it's kind of just a human emotion, so need to uh, learn that, and also do your own research. So uh, not instead of just blindly following some people out there, it's better to do some research on your own. Yeah, so this was about the risks and how you can get started in the crypto journey. So I would want to make an analogy, like when you are traveling out there, maybe you are traveling to a foreign place. There are a few things you would need to learn before you travel. So like you would want to have the local knowledge about the place you are traveling to. You would want to have some travel money to spend around. You would need your passport, and you would need to like take care of the security of your things. So just comparing this to the journey you would have in the crypto world. So first is like the local knowledge. If you're traveling in the crypto world, you need to understand a few fundamental things. Like you need to understand what is a blockchain, what is decentralization, why is decentralization important, and do you really need it? Uh, what are the different types of consensus mechanisms? So there's mainly proof of work and proof of stake. So you might need to understand what's the difference between these two and how they work at a high level, if you're not very technical. And what is an altcoin? And what are base and secondary tokens? So base token is something like L1 token like Ethereum or Solana, versus a secondary token which can be an ERC20, which is traded on Ethereum but is not actually fundamental to Ethereum, like for example Uniswap. And like understanding what is an NFT. So like I see in the recent months, many people have onboarded onto the crypto space to trade NFTs. So understanding the fundamentals of these is quite important. And I would say the most important thing while making any investment is asking yourself the question, what is the primary driver of the token price? So the primary driver could be something fundamental or non-fundamental. So fundamentals could be like the token is giving back its profits to the token holders from the protocol itself, versus something non-fundamental could be like the token is just getting a narrative in the crypto markets, or it's being driven by a lot of memes. So you need to understand what's driving the price of the token up and down. It could be like macro events, or which affect the entire space, or something very fundamental to the token itself. And so for getting the travel money, like you need to get started with uh, buying out some tokens to do some DeFi stuff. So the uh, recommended place would be like going to a crypto exchange. Like for India, you could go to WazirX or CoinDCX or Bybit, or for other users, like they could go to Coinbase, Binance, and exchange some fiat for crypto. And just like it does not need to be a huge amount. For starters, you could just start out with maybe $10, see how things work out, and as you gain confidence and learn through your journey, you could ramp things up if you want. And the other is trading crypto for other crypto. So this is on you can again do this at an exchange, and like a centralized exchange, or you could do it on dexes like Uniswap or SushiSwap. And getting a passport to move things around. So basically you would need a crypto wallet, which allows you to not only crypto wallets, but also there are something called bridges where you can transfer your tokens from one chain to another chain. Like you can transfer Ethereum from the Ethereum chain to a Solana chain. So the crypto wallets basically act out your for moving around a lot of different chains and different stuff, and maintaining your security. So for if we are using a self-custodial wallet like MetaMask or Trust Wallet, the most important thing for you is to protect your seed phrase. So it's like giving out the password to your bank account if you leak it out, and there are no like rewards on that. So you need to be conscious of this, and also be aware that if you are storing assets on some exchanges where you don't hold the keys, you are not actually holding the stuff by yourself. It's you are giving the custody of it to others. So if it's not your keys, it's not your coins. Basically for buying out crypto, what you can do is go to one of these exchanges. I forgot to plug in my own Bybit over here. But anyway, so you for just starting out, what you could do is set up an account to one of these exchanges. Setting up an account is always free, and you would need to like verify your identity and do some KYC AML stuff, which could include like verifying one of your IDs. And like usually most of these exchanges have tiered account levels, so which means like for trading up to a certain amount, you can do it without some KYC. After that, you might need to ramp up the level of verification that you do. And so also be aware, like these are centralized exchanges, and they can the main purpose of these can be like fiat on and off ramp. So you can convert your fiat currency like INR or USD or SGD to some other tokens like Bitcoin or Ethereum, and the other way around as well. So these are the primary places for the fiat on and off ramps. And not only doing trading on these exchanges, but you can also access other services. Like most of these exchanges offer some staking where you can earn some yield on the token which you hold. And also all exchanges, while doing any transaction, charge some fees, but these fees are like quite minimal for most of these. So that's probably not something you need to worry about unless you are trading very huge amounts. So this was the beginner friendly way. The other way would be using a self-custodial wallet like MetaMask. So within MetaMask itself, uh, MetaMask is integrated Wire and Transact, which allow you to top up your MetaMask up to $1,000 without any KYC. So once you have some Ethereum on your MetaMask, there are a lot of things you can do out there in the crypto space. So let's see what are the possibilities for that. So I would like to call this as a crypto fun fair. So just seeing what are the just like when you enter a fun fair, you maybe buy some coins of the fun fair in exchange of your currency, and then you can use those coins to play any of the games or use in any of the machines. So I would like to make an analogy for that. So the main thing people usually do is trading, which is exploiting volatility, which and having some utility. But there are many other things which you can do. So the first one is DeFi. So this is one of the more advanced side of things. So like there are a lot of financial products which are being ported over from the traditional finance to the DeFi world. Like now there are many derivatives exchanges, options protocols out there, and like there are many advanced things that people who are advanced and well versed can do, like looping strategy or like getting yield on some of the stuff, harvesting on some of the farms. But not only for the advanced users, even some beginners or basic users can try out some of the DeFi stuff, like using Uniswap to swap one of your tokens for another. And like people need to understand, so this is completely permissionless. So there's no entity or government that can say that you cannot participate in this or you cannot do this. Like for example, if someone who's out there in Ukraine or Russia who has some sanctions, like DeFi doesn't care about it. It's open to everyone and it's completely permissionless. And then apart from DeFi, you can participate in some of the other things like staking. So if you have some tokens, you could like stake your tokens to a validator and earn some interest on top of that. And depending on which chain you want to mine and where you live, the mining can be a bit profitable for some people. So you could just run a program on your computer and mine the newly minted tokens. And not only this, you can also participate in governance. So like there are several projects out there which have huge treasuries in the hundreds of millions and billions, who like there's no CEO of that company taking the decisions, but they put out a governance proposal out there in the public, and the token holders can come and vote and like participate in the direction of the project. So you can participate in the governance stuff. And apart from that,
so Siddhanjay, I'll just have a question here. So can you also explain how does staking work and how is that beneficial?
Yeah, sure. So let me just give an example of Ethereum. So like as we know, Ethereum today is proof of work, and it's with Ethereum 2.0, it's going to transition to proof of stake. So what it means is people can previously, whenever someone wanted to run a node, they would have to like run a huge computer and a huge program to mint the new tokens. Now on proof of stake, people can deposit the Ethereum to a validator, which in turn like sets up a new validator, and people are able to mint their tokens. So by staking, it's usually like you have some tokens, you delegate it to some validator or some protocol, and you earn an interest on top of that in return of securing the network. Yeah.
Right, sure.
Yeah, so coming to NFTs, so like within the last 6 months or so, like NFTs have been booming a lot. Like there's different kinds of JPEGs, there's different types of crypto art. People are experimenting around a lot of stuff like generative NFTs. And like there's a lot of hype around PFPs, which is like profile pictures, which there are some NFTs which you can use as profile pictures. And it has overall been a very fun community for beginners. And like I would want to stress beginners over here. Like the recent surge of users which we have seen into crypto have been a lot on NFTs, primarily because it's quite an easier space to understand around, and like it's not too complicated for a new user, and like just people tend to have fun like trading on NFTs and just using it for different things, or just like keeping it to show people around that yeah, I got this NFT which is like highly respected around some of the communities. So if you're just starting out in crypto, like NFTs might be a good fit for you if you are into that stuff. And there's also been recent movements around play to earn, which was started by a game called Axie Infinity. So this is where you can play some of the games on the blockchain, and in return of playing the games and having fun, you also earn some of the tokens in return. So like this space has been slow to develop as of now, because the games do take a lot of time to develop. But like I expect in the near future, there would be another boom in the play to earn market as more better games developed by better studios over time. Yeah, so this was mainly what I wanted to share. How you can, as a beginner, you can navigate through your crypto journey and like start out from maybe NFTs or play to earn and like move on to some of the advanced stuff in DeFi. Yeah. Do you have any questions or something else you would want to discuss?
Sure, Siddhanjay. Thank you for that introduction into crypto
Mm.
and the blockchain world. So, I think we can also discuss a little bit as to, what kind of financial instruments you're building at your firm, and
Mhm,
what is the vision over there. So, it's a crypto exchange, although I'm
mhm,
sure you're working on multiple DeFi kind of
mhm.
instruments. So, what is the vision, and how do you see that your particular exchange evolving?
Yeah, so like our exchange started out around 2018, and like since then it has been growing tremendously and very fast. But like in the recent past about an year or so, we have seen a lot of trading volume shift from the centralized exchanges to a lot of decentralized stuff as well. Like a lot of trading volume has moved from centralization to, like, let's say Uniswap, uh, and like people also tend to use DYDX, which is also on-chain derivatives exchange a lot. So like the future vision within our blockchain division is, as things mature over in the space, uh, people might want to use these decentralized alternatives much more over to the centralized ones. Like just for example, at least in Singapore, none of the exchanges provide or are licensed to trade derivatives for retailers. But you can still do so at most of the decentralized exchanges because it's completely permissionless. So we do see a very big transition happening over to the decentralized world, and we want to be prepared for that. So we are building out uh, similar alternatives out on Ethereum and most of the other chains. And we want to be prepared for the next transition.
Okay, so right now you're in a phase from moving from a centralized exchange to a decentralized exchange, is it? And that is where you
Uh,
see.
yeah, like we want to provide both alternatives to the users.
Right. So,
Mhm.
what do you think are the challenges and what are the benefits of a decentralized exchange over a centralized exchange? And
Mhm.
why do you see this shift happening right now?
Mhm. Yeah, so why do we see this shift happening? Like it's kind of a fundamental philosophy of people in within the crypto world that like probably centralization is bad and decentralization is good. And like we do see many of the people using exchanges mostly as an on and off ramp for fiat, but like once they acquire the ETH or other tokens, they move it to MetaMask and do uh, a lot of on-chain stuff. And like what for all of the stuff that is on-chain, like participating in various DeFi things, you cannot do the centralized exchanges just don't uh, like give you the enough flexibility to use your funds in the DeFi world. So you still have to like move over the funds to your own custodial wallet and uh, uh, trade it out. Um, yeah, so like providing such DeFi alternatives linked to the centralized exchange itself, like we would be able to gain a lot of user base, which is already there in the centralized exchange out in the decentralized world as well. And as for the challenges, like the most challenging thing I would say is the security. Uh, like uh, and I would say the space is still a bit immature, um, like in terms of the technologies for developers. Uh, like if I want to build out a decentralized alternative to a centralized exchange with the same robustness and the same high level quality of code, many of the tools are still missing out in the DeFi world for developers to build very high quality stuff. So like I would say that is one of the main challenges.
Sure, sure. So, also there are already established decentralized exchanges, and now you would, in moving to that space, you would be competing with these already incumbents. So, how do you position, or how do you make sure that, you also come out as a winner in this?
So I would like to categorize it into two things. One is the AMM DEX market out there, which is like mainly dominated by Uniswap and SushiSwap. I would say like that market is quite a crowded place right now, and it has most of the projects, like many of the projects have been successful, and like uh, I would say there's an alternative DEX market of trading perpetuals and derivatives and options, which is still quite immature, and there are not many products out there which people can use. So I would say like that market still has a lot of scope in terms of the development and growth. So
Sure.
like we would ideally want to focus on those areas.
Right, right. So, are there uh, there's some kind of financial instruments that you're also building for the DeFi exchange that is not a part of your exchange as of this moment?
Yeah, we still are building, but like at this point, I cannot disclose it due to confidentiality.
Sure, sure. Also geographically, where do you see, what is your current base, and where do you see the future audience coming from on your exchange?
Yeah, so right now our company Bybit is headquartered. It was headquartered in Singapore, but until recently, about a month back, like we have moved our headquarters to Dubai. So like we do see the space out there in Dubai growing out a lot, and the government has been quite supportive in terms of regulations and also incentives for the bigger crypto players to move their operations and headquarters to Dubai. So both in terms of the legal structure and like the growth in terms of growth of users, I see like Dubai as a quite good place where crypto may flourish further. But apart from that, like even Singapore has been quite good so far.
Right, right. And in terms of audience, where do you see your next major market? Is it South Asia? Is it Europe or somewhere else? Where do you see a lot of people coming onto crypto next?
Like I can't say it in terms of in like respect to Bybit, but just like giving my opinion, like I do see like still the most of the user base is concentrated out there in the US and Europe, but there's a huge expansion potential in some of the MENA countries, and like over even in India, like the laws and rules are quite in a gray area right now, but like as we get clarity on things, like I do see like even in India the crypto to boom a lot and gain a lot of users.
Sure, sure. But I think one challenge, particularly with India, is the kind of regulations that government is bringing up. They're not very crypto friendly at this moment. They're highly taxed, and it's still a gray area if it's legal or not. Right. So I think that is one challenge that we would need to cross. And also, so what are your views on the CBDC that the government is currently building? And I think it would be based on blockchain. And how do you see that?
Like so, I feel like most of the governments, they are trying to get a hold of regulating most of the crypto, but like technically that would be quite difficult to regulate and implement. So like I just see the CBDCs as mainly a proxy for the governments to like regulate the crypto. So instead of regulating and enforcing regulations on some of the things which are not technically feasible, they want to like give out a proxy which they can actually regulate and which also can flourish within crypto.
Sure, sure. So thank you, Siddhanjay, for coming out today and for a very informative talk. And with
Thanks.
that, yeah.
Thank you. It has been nice being here. Thanks a lot.